Money on my mind, looking for a dime. James Locke in the house, gonna help you shine.
Hello, and welcome to the Poole Locke YouTube channel. I'm James Locke. Today we're going to answer two more Ask James questions of the day. First question is from Barbara. She says, how do I know if I'm investing for income, and what can I look for on my statement specifically? We're going to dive deeper into how you can assess if you're actually investing for income based on your investment statements, especially with that focus on reducing risk and volatility in retirement. Now, as we've discussed, the key to understanding whether you're investing for income lies in distinguishing between income and growth or capital appreciation components within your portfolio. Now, income typically comes in the form of interest and dividends. They're kind of the regular payments you receive from your investments. Now, if you're looking at your brokerage account statement, one of the first things you should look at is the yield column. Now, not all brokerage statements have this, but if yours does, it'll show you the percentage of income you're receiving from your investments. Now, this yield percentage gives you a clear picture of how much income your portfolio is generating relative to its value. So if your statement doesn't have a yield column, don't worry. You can usually find information about interest and dividends paid year to date, maybe on the first page of your statement. Now, this section details the actual dollar amount of income received from your investments over the past year. Now, in contrast, the capital appreciation component of your portfolio reflects the increase in the value of your investments over time. So this could be from, like I said, capital appreciation, where the market value of your assets increase, or depreciation, right, where it decreases. So growth is essential for maintaining the purchasing power of your investments over the long term. But in retirement, the focus typically shifts towards generating a reliable income stream. Now, for those with a 401k or 401k accounts, it's often a bit trickier because 401k statements typically don't break down income separately. However, you can still assess your kind of overall portfolio performance and returns, to understand how much of your gains are coming from income producing assets versus capital appreciation oriented ones. Now, if you're uncertain about how to interpret your investment strategies, or if you're not seeing the information you need, reaching out to your financial advisor is always a good idea, right? Your advisor can provide insights into your portfolio yield, help you understand your income versus capital appreciation balance, and ensure your investment strategy aligns with your retirement income goals. And remember, investing for income in retirement is about building a portfolio that provides steady and reliable cash flow while minimizing the impact of market volatility by focusing on really income producing assets and understanding how to interpret your statements. This way you can make an informed decision that supports your financial security throughout retirement. Now, that was an awesome question. Thank you. As always, if you would like to send in your question, you can do so. You can email them to poollocke@poollocke.com. Moving on, let's go to our second question. This is from John. John says, I'm not sure how much income I can get from my portfolio. Can you explain? All right, John, let's look at that. We'll dive deeper. We're going to understand how much income you can expect from your portfolio in retirement. But remember, we always have to focus on reducing risk and volatility. So I've mentioned before, the income you can generate from your portfolio largely depends on the current interest rate environment and the types of assets you hold. So just a little over maybe 2-3 years ago, during the low interest rate period, we were able to secure 4% net of investment fees for our clients. So for instance, if you had a $1 million portfolio, that would equate to approximately $40,000 per year in income. Fast forward to today, we're looking at a different scenario with interest rates. Currently, you can expect to generate 5-6% net of fees from a reasonable portfolio. Now, this range reflects a balanced approach to income generation while managing the risk. Now, can you aim for higher yields? Absolutely. There are asset classes like business development companies, BDCs, or master limited partnerships, MLPs, where you might potentially achieve yields in the range of 8 to 12%. However, it's crucial to recognize that these assets come with higher risk levels. They can be more volatile, and the income they generate may fluctuate, potentially impacting your principal. When considering income from your portfolio, it's essential to strike a balance between yield and risk tolerance. Opting for higher yielding assets may provide more income initially, but they also come with increased volatility and risk of capital loss. On the other hand, a diversified portfolio with a focus on quality income producing assets aims to provide that steady stream of income while preserving capital over the long term. Now let's kind of clarify something about maybe bank CDs, right? While you might find short-term CDs offering 5% or more, right? These rates typically apply to shorter durations. Now for retirement planning, where you're looking at long-term financial security, kind of locking into longer-term assets with stable, predictable yields is more appropriate, right? This approach helps mitigate the impact of fluctuating interest rates over time. So in conclusion, the income you can derive from your portfolio should align with your financial goals and risk tolerance, aiming for a net yield of 5 or 6% from a diversified portfolio of income-generating assets. That would be a reasonable target in today's market. Now, by staying informed and understanding the dynamics of different asset classes, you can make informed decisions that support your financial well-being throughout retirement. Hey, thanks for the awesome questions. As always, if you would like to send in your question, you can do so by emailing them to poollocke@poollocke.com. And if you like what you heard, go ahead and like and subscribe to our channel. I am James Locke, your retirement income source, and I will see everyone next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear. Savings in the bank.